Gujarat Kidney and Super Speciality Limited. Is it anything different? Is listing game possible? Let's break down in this video. We'll look at the strength, risk, valuation and peer comparison and the final verdict. So don't skip till the end. So let's get started. Gujarat Super Speciality Hospital IPO opens on 22nd, closes on 24th. Price band is 108 to 114. This is something interesting. The initiation of refunds is on 29th, listing is on 30th. So there are a lot of days difference between 24th to 30th because of the holiday season. The entire issue is a fresh issue of 250 crore. It's a very small IPO. About the company, he started it recently in 2019. It's a multi-specialty healthcare services hospital. It's come from the digital industry. It has 7 hospitals, 4 pharmacies, majorly in Gujarat with around 490 bed capacities. As of June 30th, it has 89 doctors, 332 nurses and 338 other staffs. If I want to look at the strengths of this IPO, they have very strong expertise in renal sciences. They have a very good name in Gujarat. They are a asset-light hospital. They work on that model. They don't buy land. Instead, they do the leasing without any buying the land. So it's an asset-light model which they work on. It's 100% fresh issue and they're targeting expansion to acquiring new hospitals. And also, the major thing is the doctor attrition is less compared to other peers in this hospital. So these are the strengths about the IPO. Let's look at the objective of this IPO. They want to acquire one Parek hospitals in Ahmedabad, and they have already acquired Akshuni Medical Center, for which they have to pay some amount of dues, which they are going to do it. And also they are again planning to set up a new hospital in Vadodara, buying robotic equipments, and also other certain borrowings they want to do. So new acquisition, paying the amount for the old acquisition, all those things they are doing as part of this IPO objective. If we look at the financials, right, you can see the total income. 23 it was 0, March 24 it's 5.48, March 25 40.04 crore. There's a massive jump in the total income there, and also the profit after tax, it was negative and it became 1.71 and it became 9.5. As of June 25 also they've already made 5.4 crore of profit. It is a very good thing. Only thing is the boosted margins raises some eyebrows, and whether they can sustain that margin or not in the future is the concern here. And also this data includes only the financials of Ashwini Medicals which they have acquired, and they have not included the financials of Parek Medicals. So based on that, it can either go even more positive or negative. But only thing what we see in the financial is sudden jump, and also revenue is also increasing. Revenue and surplus is also increasing, which is also a good thing. Borrowings, the amount they're ready to pay in this as part of the IPO objectives, which is also good. So sudden jump in profit is the only concern here. If you look at the peer comparison, right, the revenue is around 40 crores. If you look at the other hospitals, right, the revenue Etarth is 988 crores, KMC 263. Agarwal you cannot compare that, but other GPT hospital 429. What we can say is it's a very small hospital as of now, concentrated in the small hospital chain, concentrated in Gujarat. Even the PE ratio, right, if you look at GPT, it's coming at 27.05, Ashrafi Hospital 27.03. This post IPO it will come up on to around 41.59. So it is higher compared to the other peers. If you look at an average, it might come up around 24 to 34, 35, but it is a price at 41. For a small hospitals, this is price bit higher is what I feel. So what are the major risks? As I said, only concentrated on Gujarat. Second is acquisition. Anything can go wrong in this acquisition in the future. The deal may not happen. That is other thing. Lease, as I said, lease dependency is also they are not buying any land. So any lease changes in lease agreements is a problem. Sustainability of the recent growth, sudden jump in the profit is also another problem. And higher valuation, as I said, the previous slide, that is also another concern. Its average anchor book, low GMP is there, and recently listed Park Medicals and Nephrocare, which is also similar to this hospital, did not do that great. Did not give like 20-30% listing pop. Okay, Nephrocare gave a small pop, but it had a very good anchors and subscriptions. And also the lead manager Nirbhaya Capitals, out of the 4, last 2 have listed in discount. These are the risks what we see. So what I would say is, safe investors thinking all these things into consideration would better to avoid it, because recently when the KSH international IPO did not do well, it barely sailed through, and there is a lot of time difference between the closure and the listing. 4 to 5 days I think happened in the market. Better peers are already available. Neflocare is even a bigger, better peer than this. So I would say safe investors, nothing great, sudden jump in profit, so better they can avoid. But very high risk takers can look at the QIP subs. If the GMP remains above 10%, then small or flat listing gain is possible, is what I can say. So thank you. This is a short review of this IPO. Please like, share and subscribe.